Hello, good morning, everyone. It is Tuesday, soppy, wet Tuesday, May 26th, 5:37 a.m. It is Stevie Ray Vaughan time, flooding down in Texas, I tell you what. And overnight, we got our crude breakout of its wedge. So I am expecting price to get closer to my 56.68 target. It may get caught up in some price action here in this range that we had and bounce back up. I'm not sure if we'll make it down here today or not, but somewhere generally, I'm going to be looking for opportunities when price is below the value area low. And that's where I'll be looking to take my opportunities after that's already broken below the value area low, pulled back, and take them when participation is coming into the market. The first target is this VPOC that needs to get taken out here at 58.96, and then I'll expect to see another exploration down. But my new game plan mantra is going to be one and done. And I've put a lot of thought into this, and I'm going to wait for participation in the market. I'm going to try to capture one signal, one and done mentality on my shorter time frame chart. And here's an example of a downtrend that I get in on these inflections. I wait for a pullback. I like to see more than a 2-bar pullback, but a 4-bar is ideal at a location like a value area low or point of control, and then get in. So I'm going to wait for my best pullback entries and try to get my 15 ticks. I'm going to take one off at 10, one off at 15. That's $250 a trade times 3 contracts is $750 per trade. Okay? That is $15,000 per month or $180,000 per year. One and done. Very simple. Wait for your best pullbacks and then try to get in. If I had gotten faked out at this value area low, I would have had a loss. So I probably would have had to have done 2 trades on this entry, but you can't win every single trade. You have to wait for your best pullbacks. And so I like a 4-bar pullback if possible, and at a location if possible, to take my entry with trend and leave myself room to let the trade work out and take my profit and then go on to the next day. Now that's a trend trade. If you find yourself in a bracket, you don't trade a trend. You put your lines up, and as soon as price hits that line, you enter back towards the mean. That's the only way to trade a range or a bracket. There's no indicators, there's no oscillators. You have a line, and when price touches that line, you enter back towards the mean. And there's your other one and done. So I only have 2 trades now: inside outside value and bracket. And today we're breaking down out of a wedge, so I'm expecting to see follow through, come back to this range here, and we'll see how far the price action gets following this Memorial Day weekend, to see if we have any extra volume. Right now volume is extremely light, 24,996 contracts, and we have a very small range, under $1 for blowback. So we had a coil, we broke out of the coil. I expect a test of that coil and then it to run again. If it breaks back inside the coil, it's a failed pattern, and you just have to trade what you see. But usually they check the trend line and continue on. So we'll be watching this and wait for our entry opportunity. And I will hope to capitalize on my direction and participation and see if I can execute my game plan of getting one and done every day. We'll see. Maybe it'll take 2 and done or 3 and done. Who cares, as long as I get it done every day. Y'all have a good one.